Hi friends, I'm Rocky Outcrop. This is Ethereum Technical Analysis. Thank you so much for joining me. We're going to look at Ethereum versus USD and Ethereum versus BTC in this episode. I need to know from you though, if you could let me know in the comments down below how if you value the BTC one. That includes people who don't. So let me know if you just don't care about the Bitcoin pairing, because I suspect people don't really, and I'm wasting my time looking at it. But I just don't know. I think it's interesting. I look at it so I keep my fingers on the pulse of the market, but I don't know if any of you care. Let me know. What do we have here? Is it such a coincidence that the prices have come back down to this line that we had drawn on the charts? No, not really. That's probably why you should subscribe to the channel. We're looking at prices in around that $413.80 price point that we actually spoke about quite a lot recently in terms of where the prices would need to stay above and all the rest of it. But we've also seen the prices come down today to $402. So of course we knew all about that, as well as being an area for where the prices could go to. And I also want to say to everybody that I want to have some more people to follow on Twitter. I've actually unfollowed most of the people that I follow earlier on, and no, I didn't unfollow most of the people. I unfollowed a few people because there's so much crap out there in the world. This channel is probably crypto's best kept secret at the minute because of the quality that I put out on a daily basis here for people. And I just think that it's about time that we started sharing that with people a bit more and stopped following the people who are actually just revisionist idiots on Twitter. And in fact, I'm kind of tempted to get rid of everybody, including people like the currently named Litecoin Jack, BTC Jack Sparrow, of whom's tweets I find very little value. I have to say, I don't really read them. I tend not to read them. I don't need to read them because like I say, I don't get any value out of it. So you got a YouTube channel as well. I didn't realize. Let's check it out. He's only got 1,500 subscribers. Mental. That's what our target is for September. If you could help, that'd be cool. Well, he doesn't do anything. Let's just see what he's like when he's talking.
Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. It's been another week, so time for another video. I've been thinking about it for a while, whether I should do one or not, because let's be honest, price hasn't moved much. ETH was in this over-under pattern, kind of reclaimed the old.
So I'm thinking about unfollowing him, not thinking about it very hard, just going to do it. I'd like to find other people who to follow, because I find that there's not any value at all in any of these people on Twitter. Interestingly, by the way, you don't put a comma after this. This doesn't make any sense. This is like he's talking. This doesn't make. Lying is an intent to mislead. Lying is an intent to mislead. No. Lying is an intent to mislead. You don't do that. You also don't put two spaces. Did he edit? You don't put two spaces after a comma like you did over here. So paying critical attention is obviously something that I think just all of us do as Rocky Outcropticians anyway, and we notice these things. Why do I follow this guy? Who is he again? It's just somebody who I've been recommended to follow as well. If you follow me, let me know. I'm not sure who you are. I'm not going to follow you anymore either. I don't think you've got anything of real value for me, to be honest with you. This guy here, the Martini guy, do not doubt altcoins. Just holding $1,000 of altcoins has made two people I know Bitcoin millionaires. You're only ever $1,000 away from $1 million. Okay, we're traders. We don't really get it. The Martini guy. He's not actually. I don't know if I don't know what he is actually. He's a good guy. I like him a lot. I think he's entertaining and he's a good guy. So there's that. But he doesn't put out any content of value. I think that the channel that we have here on YouTube, though, puts out an awful lot of content of value, really good value. So let's not keep it as YouTube's best kept secret anymore. Let's tell people about it. Let's look at the price action anyway. What we've had here in this run up towards this high was bearish divergence shown across all of these oscillators down below. That's quite distinct, fairly obvious. And we saw a pullback down towards this price of $400. Obviously, a distinct 10% pullback from our 440s or so highs. We've got the prices currently in there at 413. They've been kind of a little bit volatile in the sense today that we've been down at 402 and up at 427, and that we're actually sat here at 413, which is an area that we pointed out as being fairly significant, in terms of maintaining the upward sort of positivity about the price action. We've moved outside of the parallel channel, which we did actually move into, and when we broke out of the symmetrical triangle over here that we were talking about, and we've had this as a target. I don't know why. I just wanted this to not have a wee gap there. We had this as a target towards the top side, the sort of the parallel channel that we came up up, and it's dictated the price action, really well for us. The median line again, and this white horizontal line here on there showing us exactly again where to be looking at if you were shorting this thing, for the re-up on that at 435, being able to take profit down there at 403, very good on you if you like. Now, of course, it is harder to be a bear in a bull market and to make profits shorting things, and it would be wise to be more cautious about it at these areas, and to take profits on these things in both of these areas, but then of course there are other areas towards the downside to look out for if this were to be the case. First off, looking at where the 21 EMA is, it's coming in right at the zone here of where that symmetrical triangle was on the chart, and where we had a bit of an inflection point in the market, and of course that would be a sort of point of control here. If I was to bring up the VPVR, would be coming right in at this line here in terms of where the most the most trade-ins happened at recently. Something to maybe kind of consider as well if we do see a pullback into around these areas, because this has got to operate in terms of support for us, or else it's kind of bad news. Looking here, we could have a few of these other lines that we've got on the go give us that information a bit clearer for us. I think if I just get this Fibonacci line instead, where are you here, and move it up to there so it matches in, then we have it a little bit easier laid out for us at 395.40. 395.40, obviously, I just kind of moved it up there to be wick, it was going wick to wick, and we got 395. What does that kind of remind you of in terms of 236s and whatever else? Well, of course, it reminds you of over here where we have the positive case scenario, 236 Fibonacci having been made in there at 394.48. So that's, those two syncing up with each other at the minute. Movements beyond either of those obviously quite bearish in terms of looking at these for targets then, and where you could take it. If I just use this Fibonacci again here if I just use this one here, now where have I drawn this in from actually? Let me just double recheck here, because I don't want to get ahead of myself and say the wrong thing. We've taken this from the swing before it went up, right? So this one starts, just let me click it so I get it. This one starts. This is embarrassing. Hey, this is embarrassing. Where does it start at, Rocky? There. It's just so much noise. That's it there. So this swing low before the swing high, and that puts in the 230 at 395. Looking at this one here, then when did I start this? Just at the March lows. Cool. Okay, so there's two ways of looking at this at the minute. If you're just looking at it from the most recent swing low to high, movements past this point are obviously quite significant for a number of reasons, like we touched on before I ever started talking about the Fibonacci retracement area. Then, of course, if you're looking at it from the broader perm perspective, then 361 comes in as being quite important. And if you look over here, then you can see that 364 is the 382 on this one. So there's a little bit of sort of confluence with that one. The 618 coming in there at $300, let's call it, and go back over to this one here and seeing that at $309 is where the 382 is on this one. And then if we were to go down for golden pocket on this, you're looking down to 225 area. Then thereafter, if you were to have 225 down to 213 or so, if that were to be the case, where the 200 simple moving average is coming in at the minute currently. And we've not tested the 50 in a while, and if we were to test the 21 and break past it, then the first sort of target you could be looking to might be that 50 simple moving average, and that comes in there at $315. It's $100 down from where we are right now. You're talking about nearly a 25% drop off in price. Obviously significant. If I just take it in from where the price action currently is, then you're looking down towards this area. Now, what might trigger that as well, moving past the Fibonacci chat and looking at other things, is of course just kind of looking at the takeoff. I'll take off all the drawings and point out again where the 21 EMA is at 392, which ties in with those 236s we were talking about before. Put it back on the drawings, talk about this area, this zone that we spoke about as being very key. Moving down below this here could be the start of something we need to be aware of. And currently, we're in the midst of potentially doing that. So let's look out for that, with our lows coming in around about that $406 area. One of the reasons why I stopped following Jack Sparrow, or whatever you call him, is because, can I go back to get to his page? No. One of the reasons why I stopped following him was because of this sort of tweet that he put out earlier on. I want $400 for ETH and I'll be sad if you don't give it to me. The only place I got filled for extra Ethereum contracts is Femex. Super tiny bag, but at least it's something, as in $400. We're looking over here at the price, seeing that it came down to $401.57 on Coinbase, and it came down to $402.10 on BitMEX. And it's kind of thinking like, putting your orders in at round numbers, that was enough to make me not want to follow them anymore. And just in terms of just that was enough for me. I'm just really, really not in the mood for Twitter at the moment, and maybe I'll stop using it. But that's why you should go there and follow me and talk to me on it and encourage me to actually have a use for it, because really it's just full of charlatans. Not that he is one, he isn't one, just crypto Twitter is in general. Put such a bad taste in my mouth that I can't be bothered following anyone. That's what I'm saying. Greatest respect to everybody. So looking here, 395 again. What was I wanting to talk about? Other moves down past that zone. We talked about the zone here with this box on the go. I wanted to talk about and if we did move down past this area all at once at the 385, you're going down past the downward sloping line of the ascending triangle that we had, or the descending triangle we had on the go before, the 21 EMA, and of course then the median line of this part of this pitchfork. This pitchfork actually perhaps giving us the sort of the overall roadmap, if we want to look at it this way, in terms of where we could see key inflection points, with a time basis on them over the next wee while, immediately dropping down towards these areas, or looking towards 332 and then down to 280. If you're looking at this coming down very, very rapido. We spoke about all this yesterday though, so check out yesterday's episode for more information. Other things that we're looking at for as well as this trend line towards the top side be maintained. Overall, I've kind of got this in a little bit kind of shaky wakey at the minute. It could be that we're testing it just now, depending on how you've drawn it in. Could be that we've got a little taste more to go, perhaps in the stochastics. Then we come up towards the top side, we have the bearish divergence again, just to reiterate that, like I spoke about earlier. This trend line obviously could be done on any of these things, depending on how you want to draw it in. You could just have it sort of slapped onto them right now and say test, it's happening. So you'd be wanting to see things turn around, and not have this week be a crap week overall. On that note, looking at the week, you can see here that there is this red candle so far, and that overall the price action, if you were to go down to another smaller time frame and look at the shape of that thing, could be considered to be slightly wedgy or parallel channely, depending on how you're looking at things. Now, if it was kind of wedgy and what I was doing in this, let's go to 12 hours for this. There's no. This here could be considered an Adam and Eve type thing with the neckline where that box is. By the way, we could, various things like that. This could be considered wedgy with a breakout coming up from this thing potentially for it, if that's the case. And we could also look at this thing as having a sort of descending triangle type aspect to it again here, like we had in the past, or indeed a symmetrical triangle. Maybe it looks most like a symmetrical triangle in that shape of things there, but not really. When if I just take this line here, then and match it up with the sort of the lows over there, you look at it as being more of a descending triangle, really. So that would be our second descending triangle in a row, and of course this last one broke out bullishly, given that we're in a bull market. So just remember that the trend is your friend until the end of said trend. But if we were to break down from this one, then that would take us down. So this can be our final little sort of thing to talk about on the show. This could take us down to those targets that we spoke about before, the 385 area, where you'd be moving down and asking questions along the way of where are we going, where did we come from, where are we going, Cotton Eye Joe, as we spoke about, depending on when that all happens. And if we had a sort of 60% move off the back of it, really, and it happens soon, you're still looking at the same sort of deal. Depends on how this goes, if it gets front run or overextended. Anything needed to be talked about? I don't think there is. I think that we've given away all the value that you could possibly hope for on this. Again, when you see bearish divergence on the MACD, look for wedges. Let me make this a different color. Where's the color gizmo for this? Where have I got it hidden? Here? No. Where are my options? Whatever. I'll do it in the Adobe After Effects. Make it white so you can see it. And another one. When you see bearish divergence in an uptrend on the thingy, look out for what we're doing here, rising wedges. And then of course, if that were to happen, that could take you all the way down to the $309 area on a full measured move off the back of it, or 350, both of which we've spoken about in the past in terms of just areas to be looking out for. Okay, right, great. No, I said I was going to do this as well. So I said it, so I'll do it. This is what we talked about quite a lot recently. I'm going to do it real brief. look at this. This is like a roadmap leading it out for us. 21 EMA of quite good importance. This is the 12 hour. Go up to the 4 hour, you can see that we're below it and have been for a while. Means that we can kind of underscore this area as being of importance. We'd need to see support coming in there at the 0.034 area so we can move towards the top side, or else indeed maybe we're going to see this depreciate further against the Bitcoin price. And maybe that is a sort of, if they want to be considered canaries in the coal mines, perhaps leading the way in terms of it being a bearish turnaround. Of course, reiterate, trend is your friend until the end of the trend, and of course it's always on you to make your own decisions and everything else. And I'm not a financial advisor, yada yada yada. But then as well, looking at this is how is this shaping up in terms of divergences? Well, this is slightly lower and it's slightly higher in the stochastics currently. The RSI has come lower here on the RSI, but compared to the previous lows, it's lower there as part of the overall upward trend. So this could turn into hidden bullish divergence. It could do, but then as well, it could just simply continue on down the way with a scope for more movement towards the downside, given the current positions of these things. If we were to break on beyond the lower area of this parallel channel, and I'm looking at that 0.03468 area for that being living below the 21 EMA on the 12-hour time frame is a bit sketchy. Or sorry, is it below it or above it? Yeah, just right on it at the minute, just below it. And then on the 24-hour time frame, fake out zones from this move could take us down to 33.69. But if we do move down below 32.68, which is a very significant zone given that's where we have our 236 Fibonacci retracement at, then I would be happy enough to look down towards targets such as 29.80, 27.35, and then 24.90 in terms of the 0. Blah blah blahs for this one. That's going to be quite brief on this one. It's fair enough to do it so briefly. We've already spoken about the shapes, the patterns of these things. This is a symmetrical triangle which we've got on the go on the RSI, for instance. Now this could also be considered to be a descending triangle if you want to draw it in like that as well. There's these things you can do in the freedom of your own trading view. Absolutely feel free to do so. But when you've got a downward sloping trend line along the top end of something, what does that signify in an upward market? Well, that's going to be bearish divergence, isn't it? You can see that across the board here for this one. So there is definitely an element of that, and that's going to be an area, and again, a canary in the coal mine for the wider crypto market for us, perhaps in general. And a quick reminder to people that we also discussed this in terms of the context of Litecoin yesterday. You might want to go and check out the Litecoin bonus coin episode, which you can find on the channel, and what could be in terms of canaries and coal mines for us. But of course, we're in an uptrend. We could easily see the uptrend continue. And of course, as I've been talking, the Bitcoin prices have moved towards the top side ever so slightly. So that could be good. We have found support in these areas. So that's good. There's a few negative things to be considered as in order to take the sheen off of that overall idea of we're in an uptrend. So that continues. And yeah, cool. I'm going to probably cut the Ethereum Bitcoin technical analysis out of these episodes, like I say. So as you can see with the accuracy of what we've been talking about recently, you may not want me to do that, so you'd have to let me know, because this has been super good for us doing it. But then at the same time, maybe it can make its own independent video. And also what I'm considering doing is combining Ethereum and Bitcoin together, since there's got such low interest in either of them. So maybe they should be the one episode together. Let me know what you think there, and of course, if you like, in the Discord too. Moving on. Oh, subscribe. Nice.